Hello everyone, welcome to another Argentina brief. Let's get straight into it. Argentina hit a major market milestone this week, with country risk falling to 555 basis points on Tuesday, the lowest level since July 2018. And for the first time since the 2020 debt restructuring under Martín Guzmán, Argentina's entire sovereign debt curve yielded below 10%. Country risk closed the week at 573 basis points. In other news, S&P Global upgraded Argentina to CCC+, falling in line with what Fitch and Moody's had already done. The ratings agency cited a stronger political position after October's midterms and reduced economic imbalances. Argentine bonds have returned nearly 29% since that election, the best performance in Bloomberg's entire emerging markets index. November's trade data added to the positive momentum for Milei. The surplus came in at $2.5 billion, nearly 4 times what analysts had expected. Soybean exports to China surged almost 3,000% year over year as US-China tensions redirected demand southwards. Meanwhile, the Milei administration's fiscal anchor is holding. Through 11 months, the primary surplus sits at 1.7% of GDP, a stark reversal from the deficit he inherited in 2023. And on the energy front, YPF and Italy's ENI are lining up what could be Argentina's largest project finance ever. According to YPF, JP Morgan is set to start structuring this loan worth $17 billion for this mega LNG export project. The final investment decision is expected early next year. In Congress, Milei secured a lower house vote in favor of his 2026 budget, with the Senate's vote set for December 26th. However, he was unable to push through the annulment of extra spending on universities, disabilities, and healthcare, so he'll have to be cutting spending elsewhere. His labor reform, on the other hand, has been delayed until February or March. In terms of economic data, we had third quarter GDP stats come out with 0.3% growth quarter over quarter, slightly below the consensus expectation of 0.5%. Unemployment fell to 6.6%, the lowest of the year, and one of the lowest readings for any presidency since 1983. However, most new jobs are either informal or self-employed, so the big question mark is when private sector employment by companies will pick up. That stat hasn't shown an uptick since roughly 2011. That's it for me this week, folks. All likes and retweets are greatly appreciated, and I'll see you next week.